Well, son of a gun, we'll have some fun on the bayou. You know what they have on the bayou? They got gators, right, Bart? They do have gators. And I call this trade alligator arms, aka the covered straddle. Why alligator arms? Because we're going to go just 2 days out on this trade on our friend Alphabet, aka Google. Oh, Bart, you and that Google. You should just marry that Sergey Brin. I'm not marrying any men. I am happily married to Sparkle Barbie. If she ever leaves me, I'm going with her. So here we go. Google's at 92.04 currently. It was down a little bit, but it's been, if you look at from the very beginning of today until now, if you cross those numbers, that's pretty flat, right? Yeah, it's pretty flat. So this is going to be three parts to this trade. The first part is we're going to buy 100 shares of the Google. We'll buy 100 shares of the Google at today's going rate, which is currently at, where are you, Google? Come on, Farm Field Internet, 92.02. I'd like 100 shares, please. 100 shares of the Google. That'll be at 91.96. Review the order. Let's buy it. And it is done. So we got 100 shares at $91.95. Let's keep that number in mind. You better write it down, Bart, 91.95. Okay, done there. Let's go over to Trade Google. All right. We're going to look out just 2 days. So today is Wednesday, February 22nd. It is 10:12 a.m. in Central Standard Time. Let's go sell a call on the 100 shares we just bought. It's going to be a contract that's going to expire in 2 days. All right. So 2 days, folks. And what do we want to do here? I think we're going to be a little conservative considering that this is the alligator arm trade. The alligator is going to be right here in the middle at the current share price. And then he's going to stick his little stubby arms out in either direction. So we're going to sell a call in one direction. Okay. Not the group one direction, Terry. I know that's your favorite. It is not. So $65 we can collect on selling that call at $93 strike. We just paid $91.95. Okay, so we'll make a couple dollar bills if it runs through this strike, along with the premium that we're going to look to collect, 65 cents times 100. That's $64. Hey, it's going up. And then we're going to try to sell a put, and we're going to just go right here at 91. We're going to sell a put, and we're going to try to collect $140 for the alligator arm trade, aka the covered straddle. So let's see if we can't get $141. I don't know if we're going to get that there, Bart, but we can put it in play. And then if we're just a little bit patient, we might be able to get that filled with the estimated credit of $140, but it did move on us just a little bit right before we pushed the button. But we can always replace that order, especially when we're doing it live. We'll do it live. Let's see here. Let's go ahead and replace the order just for your entertainment purposes and my pocketbook purposes. Let's see where the bid and ask is currently. It's 140, 142. So if we go 140 right now, why wouldn't that fill? Because it went down to 139. We're okay. We'll go 139 and see if we can't get it filled at 139. And let's see, there it is, $139. So we do put that money into our pockets right here and right now. There's nobody that can take that away either, but of course the risk is a couple of things. Google could shoot up, right? It could just rise to the occasion. It could shoot right up and push past our 93 call, and then we're only going to collect the $93 a share, and anything above that is going to be collected by the gentleman or lady on the other side of that trade. But we're fine with that because this is just to make a couple dollar bills right now. It's only 2 days from now, okay? So if it rolls up to 94, 95, it doesn't matter to us. We don't have FOMO. In fact, we have LOMO, which is the love of missing out. We just like to live in our own world here in the farm fields of Valparaiso, Indiana, up in the Fortress of Solitude Studios, aka my home office, And then on the downside, of course, if we look at the downside of that trade on the put side, it could easily plummet below $91. It's already done that today, but I don't see it doing so. If I was a betting man, well, it seems like you are a betting man. I'm not really a betting man because it's hard to lose when you're selling options. When you're looking at them, this would not be considered a conservative trade, the alligator arm trade. Did you make that up? I did. I made that up. It is actually called the covered straddle. The reason the word covered is used is because this is a cash secured put, meaning I have this money available if this put option is assigned to me, which would cost $9,100. Now, don't mistake that as risking $9,100. It's not at all, because I'm exchanging that for the asset, which is Google. Me and my friend Sergey Brin and YouTube, and when we go onto the internet and we Google things, that's Google. I want to own that asset. So it's not a risk of $9,100. But if it goes down to 89, I'm still paying 9,100 instead of 8,900. Of course, that's the risk. But we're okay with that because we're trading and investing, and we're looking at currently income, because I'm not sold on a bull market this year, 2023, because I think we may have a little bit of suffering to do because of all the rate hikes that the Fed was basically forced to do because our government, drowning us with cash during the COVID. And I'm not sure you can use that word without being struck down on the YouTube. So strike that from the conversation. So 2 days out, we made that trade. We collected $139 bills, and that was kind of fun. And then what I'll do, because I still have another 100 shares of Google that you saw me buy last week. I think I paid I don't know, 94. I don't know if I wrote it down in my paper notes here. It was 94.67, something like that. So right now I'm upside down in what I paid for those shares, but I'm going to look at another, probably what they call the covered strangle, and I'm going to call that the dealer's choice trade. So we'll go over the dealer's choice trade next, with my 100 shares still remaining available for a call option on the Googler. So there we have it. $139 currently in our pocket. We got a couple of fun action on the alligator arm trade. And, the reason they call it a straddle is the same reason I call it alligator arms. I don't know if you watch any pro football or any college football, and you got a slot receiver going over the middle. He's got a linebacker coming at him full force. The ball is thrown maybe a little off target, but instead of reaching out for it, he just puts his little alligator arms out there because he's bracing for impact. So I call that the alligator arm trade, because we're just reaching a little bit outside of the current share price, and that's why it's called a straddle, because you're straddling the share price with a call and a put. And then we did it on the sell side on both sides, and that's why we're making premium today. If you're doing it on the buy side, which the same theory can apply, doing this trade where you're buying a call and you're buying a put, on an asset that you still like, but you're not sure what it's going to do short term or mid range, maybe even be flat. It could be a way to I should say you expect it to do something soon, whether it's through an earnings report or you just feel like it's been beaten down too much, like how I feel about Google right now. It's going to do something, Bart. It's going to move one way or the other. So you can be looking at it buy for both of those, the put and the call as well. I prefer to just stay almost exclusively on the sell side. As I've said it before, I look at it as the casino is on the sell side and then the gambler is on the buy side. So I'm fairly conservative in general, and I have a scarcity mindset when I don't watch myself. That's why you'll see me make little, very conservative trades and make like $50 and be super excited about it, when I could have made way more if I was a little more, if I was taking a little bit bigger risk. So there is the alligator arm trade, aka the covered straddle. And then we'll come back with a longer version. So I'm going to go out a little bit further on the dates so I can collect a little action on that call that I paid like $94.60 for last week for the 100 shares of Google. So if you have not already, please subscribe, like the video, leave me some comments. I appreciate any feedback. And I really, really, most of all, appreciate your time, because your time is basically priceless. You're not getting any of it back. So spending any second of it with me is greatly appreciated. Your new best friend in stocks, options, and dividends. I'll see you in the next video.